Hey everybody, Smart Silver Stacker here. Hope you're doing well. So Goldman Sachs has forecast that the Federal Reserve will be sending gold prices to a new all-time record high in 2024, and we're going to get into that in today's story, in today's live stream. We're also going to talk about silver and where the price for that could be heading. But first, I want to start off with this. This is the tragic, bizarre, and frightening event that we saw play out this morning in Baltimore Harbor. But I want to talk about why this is going to have an impact on inflation. So first, let's watch this live stream here. I've got it sped up, but I mean, this is a bizarre event, right? You notice the ship there on the left, it just lost power. Now, this is a Singapore-flagged cargo ship which earlier this morning collapsed the Francis Scott Key. It has shut down Baltimore Harbor, a very important harbor. And, it's not really clear what happened here, but obviously this ship was having some kind of problems. As you can see in this live stream of the Baltimore Harbor, it lost power before it collided into this pylon here. Now, we don't know exactly what caused this. Is this mechanical? Is this human problem? But you can see it's lost power for some time here, and the lights are about to come back on. And then what ensues is the complete collapse of the bridge following an impact from this cargo ship. Now, it's kind of a commentary, I think, on the times that we're living in, that people immediately perhaps begin to consider, is this some kind of malicious event? Is this an attack on infrastructure? According to officials, there's no indication of terrorism, but really just nobody knows at this point. But one thing is for sure, this is going to be a real problem for supply chains at a time of already elevated inflation. Here's a post from the Scottsdale Mint. This points out that in 2023, this port, Baltimore Port, which is now basically completely shut down, is my understanding, is the second busiest for coal exports. They exported 22 million tons of coal last year. Why is that important? Well, anything that affects energy prices is going to have a big impact on inflation, on the cost of just about everything. Also, interestingly, in Baltimore, the LME has warehouses where they store 756 metric tons of nickel. They store tin and also copper there. So this could have some kind of an impact on commodity prices moving forward. And certainly I'm sure there's going to be a lot of speculation as to what was behind this. I don't think it's a little too early to make any calls on that, but certainly any developments on that should be affecting markets as well, potentially, given what we learn as this develops. Now, let's get into this forecast from Goldman Sachs regarding commodities. And, commodities include gold and silver. SD Bullion, today's video sponsor, it's where I buy my gold and silver. If you'd like to get some, if you're a new stacker, make sure you check out sdbullion.com/new. That's where you can get gold or silver at spot if you are a new customer. Now, Goldman says that commodities will benefit as central banks cut rates. No surprise there, but it's interesting. It's not just us folks on YouTube calling for higher commodity prices. Goldman Sachs also joining the bandwagon here. They say that commodities will advance as central banks in the U.S. and Europe move to reduce interest rates. That's going to help to support industrial and consumer demand. They're saying that in 2024, raw materials could return up to 15% as borrowing costs come down. They find that U.S. rate cuts in non-recessionary environments, now that's maybe debatable whether or not we're really in a recessionary environment or not, but these will lead to higher commodity prices with the biggest boost to metals, copper and gold in particular. Curiously, they leave out silver here in their forecast. Followed by crude oil. And certainly I believe that silver will be included in the metals to benefit from easier monetary policy. Why Goldman Sachs does not say that, it's kind of interesting. I mean, leave me a comment or put it in the chat why you think they might leave silver out of this forecast. I mean, a very important industrial metal, certainly anything spurring industrial demand will lead to significant silver demand. More on this later in the live stream. The current supply and demand situation in silver, because it is important to keep an eye out. But they're calling for $2,300 gold. That would be a nominal record high, not inflation adjusted, but still, they're calling for a record all-time high gold price by the end of the year. Also calling for higher copper and aluminum metals. Again, curiously, omitting silver from their forecast here. It is very likely we are going to get some rate cuts here in the future, despite the fact that inflation remains very sticky. I mean, currently, all items, the headline CPI at 3.2%, well above the Fed's 2% target. Core CPI, 3.8%, almost double the Fed's 2% target. But the Fed here telling us in their dot plot from the latest FOMC meeting, you can see this is the 2024 sector right here. This is where the FOMC participants see the price, or the price of money, I guess, the rate cuts, the federal funds rate at by the end of 2024, calling for 3 rate cuts, despite the fact that inflation remains elevated. Now, why are they looking to cut rates? You know, I think we all know why. It's because the economy is a house of cards. I mean, big reason is rising unemployment. You know, they have 2 things going on in the economy, 2 mandates that the Federal Reserve looks for. One is stable prices. The other is full employment. Now, in an election year, despite the fact that inflation is a big problem, I think unemployment could be the bigger of the 2, and it's very likely that they will cut rates to avoid this unemployment rate, which has now hit a 2-year high, going much higher. Now, this is a chart of the unemployment rate from Fred, and you can see that in order to get to 3.9%, you got to go all the way back to January of 2022. That's when the unemployment rate was higher than it currently is. The trend is moving up. I don't really buy the official jobs numbers anyway. A lot of this data is cooked. However, the economy is getting tough, right? A lot of these jobs out there that are advertised job openings may not even exist. The cost of living is not, it is exceeding the wage growth that we are seeing. So there's a lot of problems here. And there's a record amount of debt throughout the system. You've got consumers paying record amounts of interest on credit card debts, which are, maxed out. They're over $1 trillion now, growing. The consumer needs relief here. Businesses need relief. Institutions with all this debt need relief. The commercial real estate sector is another ticking time bomb that needs lower rates in order to avoid a massive regional banking crisis. So the Fed is likely going to cut rates, and that is why we are going to see commodities, gold and silver included, moving much higher. Now, we talked about the cocoa story, how the price of cocoa is breaking out in a huge way. And this is continuing. Now, Bloomberg reporting that the price of cocoa per ton has exceeded $10,000. I mentioned this in a recent live stream, and I had some people in the comments say, yeah, but isn't the price of cocoa just going up because of a normal market dynamics? And yes, there is a big supply and demand component of this. Demand remaining steady. I mean, we're heading into the Easter season. That's a big time for chocolate demand. But some of the factors that are leading to supply issues are that we've got growers like Brazil and Ecuador struggling to keep up, to ramp up their production, to keep up for dropping production in West Africa. The West African supply situation remains extremely tight going into the start of the mid-crop harvest next week, and that is a big part of the problem here. They've had severe weather, they've got aging trees. I'm sure they have some, less than desirable agricultural practices possibly in these areas where they grow this cocoa. And, keep in mind here, this is like other commodities, right? So they are trying to ramp up production now that the price has reached levels that they say were unthinkable only a few months ago. I mean, think about that, right? Currently, how many people believe that gold is headed to, $3,000 or $3,500? How many people believe that silver is headed back to all-time high territory north of $50? Very few. But, sentiment for the metals, especially silver right now, is still in the dumps. I think maybe we've come off of the lows in sentiment, Now that we've got gold breaking out and hitting new all-time record highs, I mean, I think the lows in sentiment for the metals maybe were in 2023 at the end there, but still, sentiment remains very low for the metals despite the fact that we've seen them moving higher in recent weeks and months. And yet this is an example of how quickly these things can change when the perfect storm for a commodity hits. And, I think cocoa is just like a canary in the coal mine. I think we're going to see soaring prices for a lot of tangible goods as the supply of money is expanded massively by the Federal Reserve. That's what's coming. And as we continue to see these supply chain disruptions, and this thing in Baltimore is just the latest in a series of supply chain disruptions. You get the Red Sea where tankers are being targeted continually by the Houthis. You have got the potential for a major escalation in the Middle East conflict involving Iran that could shut down global energy supply chains with the Strait of Hormuz, where something like 20% of global energy production flows on a daily basis. This storm that we are entering into of geopolitical tension, disrupted supply chains, money that is going to be printed, massive deficits which are keeping the economy afloat, which will ultimately have to be financed by the printing press. This is all a perfect storm for commodities. I want to talk about why silver very well could be the next soaring commodity. I mean, the fact that Goldman Sachs omits silver, it is kind of strange. I mean, I think there could be something there. I talk a lot about the soft manipulation of these commodities. Everybody knows that there's a lot of chicanery that goes on in the paper, gold, and silver markets. JP Morgan traders have been convicted for it. I mean, I don't know to what extent the manipulation goes, the rigging goes. Certainly there is some. It could go much deeper than, anybody really imagines, or perhaps not. I mean, I haven't seen a lot of concrete evidence. I don't think you can get concrete evidence regarding that. But there is certainly this kind of soft manipulation where you see things like the definition of inflation being redefined in dictionaries. I mean, that's a weird thing, right? A lot is public perception and the management thereof. The belief that, if you're into precious metals, you're probably some kind of a tinfoil hat character. The attention that alternative assets like cryptocurrency gets. I mean, nobody's talking on CNBC, on Bloomberg, really about gold and silver to any great extent. However, if you tune into any of these financial networks, they talk about cryptocurrency and Bitcoin incessantly. This is another form of this soft manipulation, I believe, because the real competitor to the fiat currencies around the world is gold and silver. And the powers that be, the central bankers, they are aware of this. But let's talk about the situation in silver here. This is from the Silver Institute from January 30th. Say global silver demand is forecast to reach 1.2 billion ounces in 2024, the second highest level on record. Stronger industrial uptake is a principal catalyst for the rising global demand for the white metal, and the sector should hit a new annual high this year. Well, we'll see, I guess. We've talked a lot about the technical picture for silver, which is looking pretty good. I mean, it looks like there's a converging pattern on the silver chart that, could indicate a breakout. Gold is already broken out of a very important technical pattern on its chart. But this is the fundamentals, right? This is the supply and demand basics. And, if you are an individual who believes that the silver price is being suppressed by manipulation, you got to understand that to the extent that that goes on, it cannot go on forever, and it's going to go on until it doesn't, right? Until some factor causes, a squeeze in the market. If you see a skyrocketing silver price, you can guarantee that anybody who has these naked short positions is going to be in a lot of trouble. And I mean, there's probably going to be some fallout from the price of cocoa soaring. I don't think anybody's claiming that, the price of cocoa was being suppressed, but I mean, it was trending sideways for a long time and it just broke out. So this sort of thing can happen as a result of natural market forces. But, look at the nickel market from 2022. Nickel was being manipulated with a huge naked short position by this nickel magnate, Zhang Guangda, who caused the entire market to be stopped, the paper market to just be eliminated basically overnight because the price started to blow up following the Russian invasion of Ukraine. This short squeeze led to an enormous surging nickel price, very similar to what we're seeing in cocoa right now. And the whole paper market blew up. So, I mean, it's very possible you could see that happen in gold and silver, especially silver. But, when that happens, if you're holding the physical metal, you're going to be doing really well, right? So it's very important here to differentiate between physical metal and the paper metal. This is why stackers say if you don't hold it, you don't own it. But here, according to the Silver Institute, silver industrial fabrication is forecast to post a 4% rise in 2024 to a record high of 690 million ounces. This is led by photovoltaics. There are new photovoltaics which are beginning to enter mainstream production. These higher efficiency N-type solar cells. Now, the important thing is these things are much more silver intensive, actually. There's been a lot of talk about phasing silver out of solar panels, replacing it with base metals. Well, what we're actually seeing is that the new high efficiency solar cells use a lot more silver than the previous generations. And so this is leading to much higher industrial consumption for silver. Also, the automotive industry. Now, a lot of people will push back on that and say an electric car doesn't use that much silver. And there is something to that. There's not that much silver in an electric vehicle. I don't know how many people are even buying electric vehicles anyway. But one thing's for sure is the infrastructure for electric vehicles it is expanding, and this is due to mandates from the government subsidies, what have you. But that uses a lot of silver. The investment in battery charging infrastructure, that is going to consume a lot of silver moving forward. Regardless of how you feel about electric vehicles, they are going to continue to push them, and that means the infrastructure is going to get built. So there's a lot of things that are leading to more and more physical silver being consumed. Total global silver supply is forecast to grow by 3% in 2024 to an 8-year high of 1.02 billion ounces. Now, this is entirely led by a recovery in mine output. Important to note here, they're not building new mines. They are increasing the output in existing mines. And this is, where the cocoa analogy kind of is something I'd like to examine here. They're saying that new growers of cocoa are not able to make up for the supply gap, as it takes a while for trees to begin producing cocoa. Well, the same thing in silver. You can't just go start a silver mine overnight and start, cranking out new supply. So if we do get a squeeze in silver, it could very well remain elevated for some time because, yes, higher silver prices will incentivize miners to get out there and, produce more silver, but you can't just start a silver mine overnight. So also, it's just very important to keep in mind that last year we had a huge deficit in silver. The silver market is forecast to remain in a deficit in 2024, marking the fourth consecutive year of a structural market deficit. That means more silver is being consumed and lost through industrial processes, through manufacturing, than is being extracted out of the ground or recycled. This year's deficit is expected to ease by 9%, but still to 176 million ounces. Last year it was 194 million ounces. So the amount of above ground silver that is available is being consumed. The supply is diminishing and demand is growing, all at the same time that we see the risk of massive inflationary forces being unleashed by the Federal Reserve, by global supply chain disruptions, by geopolitical risk. And to me, this paints a picture that now at, less than half of its 2011 highs, around half of its 1980 highs, silver is a screaming deal. Let me know what you think in the comments down below about this and the other subjects that we touched on in today's live stream. Thanks for watching, everybody. Make sure to smash that like button, share the video, subscribe if you haven't yet, and thank you so much for watching.